So this week in Bitcoin and the crypto markets, I think we're in for potentially quite a bit of volatility because there are a lot of big things happening this week, such as the interest rate decision by the FOMC, so by the USA, on Wednesday. Then we have El Salvador with Volcano bonds and a lot more. So let's look at a few of those things and what could potentially lie ahead. What's up guys, Dirk here from IntelligentCryptocurrency.com. If you are new to the channel, hit the subscribe button, click that notification bell to make sure you do get future updates. Feel free to follow on Instagram, Twitter, and Telegram. The links are down below in the description. And just if you happen to be watching this on Monday still, there is just a couple hours left. If you still want to join my Intelligent Cryptocurrency VIP membership, the doors close at midnight tonight, and then I will close for a couple more months. So if you want to join us, the link is the first link in the description down below. Full 60-day money-back guarantee, but the doors close at midnight tonight. Okay, so let me start out with a chart that I did show a couple weeks ago in a video on the channel. I made a video about this where I said we could potentially be looking at a major breakdown if we get below the 200 moving average on the 3-day chart. As you can see right now, this is the red line, 200 moving average. This is a 3-day time frame. And you can see since 2017, there have only been 2 occasions when we did break below that. And when we did, we had the 2018 capitulation and the March 2020 capitulation. And this was actually exactly 2 years ago on March 12th. That is when we had a crazy drop in the markets, obviously based on the health crisis sell-off, but that accelerated everything. The markets took a major dump. The price of Bitcoin and most altcoins sold off more than 50% in a 48-hour period. Now, that was the scary part, but in hindsight, obviously that extreme fear and that crazy sell-off proved to be the best buying opportunity that you could ask for. So even though in the short term these things are unpleasant, these capitulation events where the price really drops, the same thing here, we dropped 50% in the price of Bitcoin in 2018 in the capitulation in a very short period of time. But again, that capitulation proved to be the ultimate best buying opportunity that you could have had since the peak of the 2017 bull run. So both these times when we had these major capitulations, they were the ultimate buying opportunity. Now, I don't know if we are going to get a capitulation event like that. It is a possibility, but it is also possible that we do still get a bit of a short squeeze and a bounce, like I've also made a video about. I will link to that up here if you're watching on YouTube, where April tends to be a bullish month, and I've been seeing bullish divergences set up in altcoins. A lot of people are extremely bearish, expecting the markets to crash, expecting everything to go way down, and usually when the sentiment is that one-sided, often the opposite tends to happen. So people are sitting in cash, they're sitting on the sidelines, they're expecting that crash. A lot of people are probably even shorting. I've seen people shorting, seen people saying, hey, we're going into 20,000s, maybe even below 20,000s. And while yes, I do think that is a possibility, and while I do think that may still happen later in the year, it is also completely possible that we do get some sort of major short squeeze over the next couple of weeks. You can see the price of Bitcoin has been hugging this 200-week moving average, and twice it wicked below it and bounced off it. And so far, as long as we're sitting here, we could be setting up for a short squeeze, which a lot of people are betting for the price to go down or sitting on sidelines in cash. Let the market go up, right? Maybe we rally to 48, 50,000, maybe 55,000. Everyone who's sitting on the sidelines gets mad FOMO because they're missing out and they think a new leg up started. People who've been shorting, they get squeezed out, people continue to short, and then towards the very peak of that rally, usually what tends to happen is that all those exact people start going long. They say, hey, the bull run is back, maybe it's, it's a new leg of the bull run, and while that may be possible, it could very much also be a trap, just like we saw in 2018. You can see in 2018, we had a major rally from about 6,000 all the way up to 12,000. So a 2x here in the price of Bitcoin, after which it rolled over and it continued ultimately to capitulate. Now, I do not think that we are going to see a repeat of the 2018 bear market where it's going to take 2 years or more and just continue to grind down. But I do think absolutely it is still possible that later in this year, we might still get a capitulation event like we saw in 2018 or in 2020, where we do indeed go into the $20,000 level. But once again, if that happens, just like these 2 times, I think it will prove to be the best buying opportunity. So if that time comes and we are ready for it and you have risk capital available, well, then you're in the best possible position, because then you can buy in these ultimate buying opportunities that in the months and the year or two that follow it get enormous runs up. And I do think something similar like that will repeat again. Now the question is just going to be, how much are we going to rally? Are we going to get a rally or not leading into April? And you know, what is going to happen there? But I do still think it's a possibility. Keep an eye on this 200 moving average on the 3-day. As long as we're staying above that, we could be building a base here for a leg up. If we get below that and we get a 3-day close below it, well, that could be dangerous for a capitulation. But as long as we're sitting here, things might be looking good for the bulls in the short term. In the longer term, as I've been sharing since late November, early December, this 50-week moving average is important for deciding bull or bear for the entire market. And you can see we've been below this 50-week moving average since December. We have attempted to rally up and touch the bottom of it, but we have not been able to get above it, especially not with a weekly close. So in the longer time frame with the 50-week moving average, bear or bull, we are still here with bearish pressure below it. So if we can get above this 50-week moving average with the weekly close, I think the odds increase massively for a newer bull leg or a longer run up, and potentially the start of a much longer bull. You can see these crosses over the 50, below and above, they don't happen often. And when they do, they tend to be multi-week or multi-month continuations of that trend in that direction. So we are still short-term potentially setting up for a bit of a rally. Potentially that could be a break of the 50-week moving average. But until we do, there is still the danger of that capitulation in the next, maybe several months, maybe the next 6 months or so, where we could still have a leg down into the 20,000. So big picture wise, that is kind of how I'm seeing it and what I think we need to be prepared for. So keep it simple. As long as we're above the 200 moving average on the 3-day, we could be setting up for a bounce, but as long as we're below the 50-week moving average, there is still risk of downside capitulation. Get a break above that 50-week moving average with a weekly close above it, and things start to look a lot better for the bullish scenario. So one thing that has been very important that people are watching with a lot of attention is the decision by the Federal Reserve about raising interest rates, and that is supposed to be announced this Wednesday. So the expectation is 25 basis point increase, so 0.25% increase. If that happens, or maybe we get surprised and we get no interest increase, even though it's most likely that it will be by 0.25%. If that happens, well, then it's as per expectation. I think the market is worried about a higher potential interest rate hike, which would be bad for the market. But if we only get that 0.25%, then it might actually be a relief for the markets, and we might actually see a bit of a major relief in the overall market, because there's this expectation that hiking interest rates leads to a market crash. But if you actually go and look at the past interest rate increases, you can see that from the very first interest rate hike, it actually took quite a bit of time before that led to a recession or a market crash. You can see the interest rates here are pretty much flat. So only after the first one, and we're supposed to get multiple interest rate hikes this year. So that means that if this is anything to go by based on the last historic data, where they start increasing the interest rates, is that we have several months, if not longer, to go from the start of the first rate hike before those markets end up in a recession or a potential crash. So with everyone being incredibly fearful right now, we might actually still be able to go a lot higher in the stock markets. And obviously if the stock markets go higher because of the correlation with crypto lately with Bitcoin, if those markets stop going down and actually start going higher, we might actually get a relief in Bitcoin and crypto too, which would line up with a potential relief bounce over the coming weeks, or maybe even over the next 1-2 months, or potentially more. We're also at an interesting place in the S&P 500 chart and the other stock market charts, but I'll show you this one as example. So this is a daily chart of the S&P 500, and you can see we had this death cross where the 50 moving average crosses down through the 200 moving average. Typically a death cross is a longer term, more bearish signal. But you can see here the last time we had this death cross on the S&P 500 was in March 2020 with that major sell-off. Now, as you can see here with the vertical line that I've drawn, at the point of the death cross was actually the exact low of that sell-off that we had in March 2020. And after that, we started a major rally and a extended continuation of the rally to the upside. And we can see we have this death cross here. At this point, we've already had quite a bit of downside and selling pressure since the last, say, 3 months or so. And you can see this has been going down, but we have a bullish RSI divergence in the same way here that we had price going lower here, but the RSI wasn't confirming it. In the same way, we have that here. We have the price going lower, but we have the RSI going higher. Similar setup, the death cross at this point. We have the FOMC meeting. If that rate hike is in expectation 0.25, or even if it's better than expected, we might actually just see a complete rebound in the stock markets, and as a result in Bitcoin and in crypto. So that's going to be something to keep an eye on. That's happening this Wednesday. Then what we also have this week potentially, they're saying between the 15th and the 25th of this month, it is possible that El Salvador is going to launch its Bitcoin bond. So basically, the president of El Salvador is going to be raising money with what they call Volcano bonds. And what this is, a 10-year Volcano bond, is the key element of Bukele's bond economic experiment. He hopes to raise at least $1 billion to increase the country's Bitcoin stocks and finance a new Bitcoin city near the Honduran border powered by geothermal energy from a nearby volcano. So the world is obviously watching this. We're going to see what happens. Are they going to raise $1 billion and buy Bitcoin with it? Who knows? But we will see. So that's another thing that's happening this week. So basically there's a lot happening this week. There's a lot of potential volatility. So we're going to have to wait and see what happens. But I do suspect that we might actually be setting up for a rally in April like we've seen. So you can see over here, I've shared this also in a previous video, the dip in March tends to be followed by a green April. And you can see the historic performance for Bitcoin in April. The worst performance has been negative 3.46, which is very small for Bitcoin's volatility. But you can see how much it was: 7%, 32, 33, 34, 34%. Last year, minus 1.98, but we had a bullish March. So this dip that we're seeing now, perhaps we get that volatility, perhaps we go lower this week still, that is possible. But let's see if it plays out in this way, that the right strategy ends up being to buy the dip in March and hold until middle or end of April for that April rally. Obviously, I can't see the future, but that is my kind of guess putting this all together. We'll see if I'm right or not. I could be wrong, so it's not financial advice, but keep an eye on all of this stuff. If you enjoyed this video, smash the like button, subscribe to the channel, and if you still want to join, there's a couple hours left to become a VIP member of Intelligent Cryptocurrency. First link in the description down below. Thanks for watching. I'll see you in the next video.